Hello everyone, this is Adventures in Bitcoin. It's going to be a little mini course on how I do crypto. I've been meaning to put this together for you for a while now. You've heard me talk about it. So I'm going to get into basically how I do crypto, how I do my buys, how I store it, how I trade it, how I use it to earn more Bitcoin. It's not going to be very long. It's very simple. It's an easy way. It's a very low stress way that I do it. What's great is that you can pick and choose the parts you like. You may not like the way I buy my Bitcoin. You may not like the triggers that I use to buy and sell. Everything is customizable to suit your needs. But before I get into it, I want to ask you to do something that I don't normally ask you to do, and that's hit the like button. So why don't you go ahead and hit it now, because you know you're going to forget. So if you, at the end of the course or in the middle of the course, you don't like it, you can always go back and take it away or leave a nasty comment or whatever you feel like doing. So with that out of the way, let's get into it. So how to trade the easy way. First of all, we got to talk about why to invest in Bitcoin, why invest in crypto, because I get this from a lot of people that are curious about it. So basically we're doing it as a hedge against inflation. We're looking to outperform precious metals. I got a lot of friends that are, I talk to them about Bitcoin. They're like, well, if I can't touch it, if it's not gold, silver, or real estate, I'm not interested. And that's fine. But I'm the type where I'm like, why not own them all? So we're looking to outperform precious metals. We're looking to outperform stocks. And we're looking for diversification. We want to make sure we have all the pieces on the board covered. It's also tax, let's say, flexible. At Adventures in Bitcoin here, we always advocate to pay your fair taxes. But whatever you do pay, whether you pay or not pay, that's between you, federal government, and your CPA. So what are the risks? Tell me what the risks are of cryptocurrencies. Well, one of the risks is regulation. For example, on December 5th, 2013, the People's Bank of China prohibited Chinese financial institutions from using Bitcoin. After that announcement, the price obviously dropped. So here's an example of a particular regulation that affected the price immediately. Bitcoin and cryptocurrencies also affected by manipulation, which, just like any other asset, just like the stock market, is prone to manipulation. It's illegal, but they tend to get away with it a little bit more in cryptocurrency because, like I said, the regulation isn't as strict, though it's coming. So an example of manipulation in 2018, the Justice Department launched an investigation into possible price manipulation by Bitcoin traders. When that news was announced, it also dropped the price. Here's some of the methods of Bitcoin manipulation, and these are the same whether you're dealing with stocks or cryptocurrencies. So one method is spoofing, where the spoofers, they post a large number of limit orders on one side of the book to create the illusion that there's either sell pressure or buy pressure for the asset. And they're looking to create a reaction, a market reaction. They want people to see this and then have it influence what they do. And once that's achieved, once they get that reaction, they cancel those orders. You see them disappear. We see them as buy walls and sell walls in the book, and then all of a sudden they just magically disappear. Another example is wash trading. It's basically buying and selling to yourself in large quantities, also to create the illusion that there's more volume or demand in the asset than there actually is. Fudding is another example of manipulation, very popular method of manipulation. Fudding is fear, uncertainty, and doubt. And here are two common fudsters that Bitcoin had in the past. Warren Buffett on the left, Jamie Dimon on the right, who is I think he's the CEO or the president of JP Morgan. Anyway, when these guys tweet out or make any kind of comments on Bitcoin, it affects the price. So, but don't worry, Bitcoin has died 380 times before, yet it's still here. There's actually a page that tracks this. If you Google Bitcoin eulogy, there's tons of these eulogies by different people just talking crap about Bitcoin. The latest one here is by the governor of the Bank of England. If you want to buy Bitcoin, be prepared to lose all your money. If you want to buy it, but understand what you got. It has no intrinsic value. And that prompted a response by Bitcoin advocate Eugene Van Dyke, who says, as opposed to, say, the US dollar that has infinite supply and is backed by nothing but debt. Okay, some other risks are supply and demand. But with Bitcoin, there's only 18 million Bitcoin in circulation out of 21 million total. So once that 21 million is hit, that's it. There will be no more Bitcoin. So the supply is going to be locked in. And then we only have the demand that'll affect the price. Adoption will definitely affect the price. If no one's interested in it anymore, then the price will fall. If all of a sudden we hear that a major store is accepting Bitcoin, you'll see the price go up. Bitcoin is prone to technical risks, as with network stability. If a ton of miners decide to leave the network could get slow and unusable. Also, network security could affect Bitcoin's price, because if there's a bug or a flaw with the security, people are able to hack the hashes, then that would definitely affect the price negatively. Public sentiment, which is basically how people feel about Bitcoin and cryptocurrency. When it's positive, Bitcoin will go up. When it's negative, Bitcoin will go down. Bitcoin is basically split between three types of investors. One is the hodlers, or the true believers. These people will not sell no matter what. They believe in the technology. We've got institutional investors hoping to come in to pick up cryptocurrency as a niche investment for their clients. And then we have the speculators, the weekend warriors, people looking to come in to get rich quick. They usually buy at the top of the bubble and sell at the bottom. So our main focus here is going to be Bitcoin, BTC Bitcoin. That's going to be our main focus. It's not that we're not going to buy any of the other cryptocurrencies out there, but we're going to focus the majority of our assets on Bitcoin. The real Bitcoin, the BTC. Why? Because it's the original. It has the power of branding. If you've ever used a Band-Aid, played Frisbee, ping pong, or jumped in a jacuzzi, you'll know that these things are synonymous with the brand names. A Band-Aid is just a bandage, right? A Frisbee is a flying disc, right? The game that you play, but we call it Frisbee. Ping pong is table tennis. A jacuzzi is a whirlpool. So we don't say these things. I hear, like, on the news, when people in these business segments, they'll talk about cryptocurrency, but they're talking about it broadly as all the cryptocurrencies, but they say Bitcoin. That's the power of branding. We're looking at Bitcoin, this Bitcoin, as a store of value, not as a payment system. We're looking at it like gold. Why is that? Because it's really not ideal for day-to-day exchange because of the high fees involved. There's better candidates for that. We've got BCH, which is a fork of Bitcoin, Bitcoin Cash, Bitcoin Satoshi's Vision, another fork of Bitcoin. They're better equipped to handle these small micro transactions. Paying $6 for in fees for buying a cup of coffee is kind of ridiculous. You want to send your friend $1 in Bitcoin and you're going to pay $7 for that. Doesn't make any sense. But still, it's still the king. It's still $10,000 right now. That's why it's more likely to make us money when it does these violent swings. All right, so what's my plan? So we're going off the idea that Bitcoin is going to moon again someday. How high? 20K is very, very likely, and I say that because we've hit it before. So it's more than likely to happen again. Past that, 50K becomes very real. Past that, 100K becomes very, very possible. 1 million one day, a lot of people are saying, not a lot of people, but a few people are saying it's going to be 1 million one day. I don't know, maybe. But if that happens, are you going to have enough Bitcoin? I know I'm not. So my goal right now is to accumulate as much Bitcoin now as I can. But how? How are we going to do it? We're going to buy the dips. We're going to buy the dips with new money. New money meaning fiat, your hard-earned cash. We're going to be buying it. We're going to be doing it with discretionary income through dollar cost averaging. I'm talking about the money you would use to go play golf, to go to the bar, to go to the strip club. Whatever it is, as long as you're not going to cry about it, that's the money we're talking about. We're not talking about selling your 401k. We're not talking about putting a lien on your house. We want to make it nice and easy. We want to establish a position over time. We're also not going to lose it to scams. You won't take long when you're in this space to see there's a lot of these frauds out there. They're usually all the same. Bill Gates is going to give you more Bitcoin if you send Bitcoin to this address, or maybe it's Elon Musk this time. They're all over the place. Other ones are passive income type of investments where you lock up your Bitcoin and they'll pay you a percentage based on their trading bot. It's always the same spiel. We just have to be careful. Not that I'm opposed to trying different things, new things that come out, because this is still a new space. There's a lot of room for growth. Maybe some of these things will be viable one day, but if you do, make sure you're using a small amount. You also don't want to lose it to gambling. There's a lot of gambling sites out there. I enjoy them too, but you want to make sure you're not using your hard-earned Bitcoin. You want to use a very small amount for these things. But how? But how really? What are we going to do? What are our actionable things that we're going to do? We're going to trade Bitcoin for stable coins. We're also going to trade Bitcoin for altcoins, and altcoins for other altcoins, and altcoins for Bitcoin. We're going to be trading all over the place because we just don't know who's going to win the Bitcoin battle. Is it going to be Bitcoin Cash? Is it going to be Bitcoin Satoshi's Vision? Is it going to be Ripple? Dare I say. You just don't know. Until that time comes, we're going to be using Bitcoin, trading it against itself and these other coins to establish positions in these other coins, when they're cheap. So we can accumulate them all over time, basically. And we're going to stick with the top names only. The coins that are included in many popular multi-asset wallets like Jax, like Exodus. There's a few of them out there. You can Google them. If they're going to take the time to develop their wallet to include a particular cryptocurrency project, then they think that it has it's liquid and that it's worth it. Also, if a coin is included in Coinbase, it's a plus. If it's rumored to go on Coinbase, you'll see that these coins will skyrocket in a very short period of time, just based on the rumor. All right, in this graphic, I'm trying to illustrate a particular market situation, a particular configuration. Here we have Bitcoin, and all the altcoins are very cheap. They're very low on the wave here. This was the only tidal wave graphic I can find that was free domain. But it seems to paint the picture pretty well. So all the coins are very cheap. What we're going to do is we're going to add new money with dollar cost averaging, with our Benjamin Franklin there. We're going to be buying Bitcoin, and then if we're happen to be sitting in Tether or any kind of stable coin, we're going to be using that to pick up these coins, hoping to ride the wave up. Here's an opposite scenario here. Bitcoin is very high. It's also, like they say, a rising tide raises all ships. We've got all the altcoins are now riding the coattails of Bitcoin. So in this scenario, hoping that we rode it up and now we're sitting in nice profit. If we think Bitcoin's going to fall or any of these altcoins are going to fall in value, we are going to transfer to Tether. We're going to trade the coin for Tether or any kind of stable coin. And we're going to sit there and ride it out. At the same time, if we're at the top of a bubble, we think Bitcoin's going to fall, we're going to cash out. We can either cash some out or all out, just depends on the situation. When we do that, we can either directly cash out and use our Bitcoin to buy at particular stores that accept it. You can go on vacations. I still think some of the travel sites accept Bitcoin as payment. And the ideal scenarios, we make a windfall in cryptocurrency and we cash out and buy a physical asset like gold. And we just sit there, let it fall, and start the whole process again. Now, of course, there's many other configurations. Bitcoin could be up, altcoins could be down, vice versa. But at least this, hopefully, at least will give you an idea of what we're trying to do. So the method we're going to be using is swing trading. Swing trading as opposed to day trading. Day trading makes several trades in one day based on advanced charting and technical analysis. Swing trading, you make one or two trades and it lasts days to weeks based on very simple rules that indicate the asset's velocity. So we think it's swinging up with good velocity, we'll buy. If we think it's trading down with some good velocity, we'll sell. Day trading can be very stressful. It takes, you got to be sitting there watching the screen all day. With swing trading, you have sometimes hours, sometimes days. If you don't get in a trade, when you see a setup on the first day, you can wait to the second day, third day, sometimes even fourth or fifth days. It moves a lot slower. All right, so here's my current buy-sell rule, and this is subject to change. This is one that I got from Jay Bravo, who has a YouTube site. I saw one video that he did, and he was explaining this particular technique, and I liked it, and I back-tested it over the course of a year, and I really liked the way it performed, and it's the one I've been using, and you'll see me talk about it in some of my more recent videos. So I'm happy with it so far, but if it starts to skew away and it's not working so well, I may change it. So we're going to consider a buy trigger, and this is either Bitcoin or altcoins, doesn't matter the asset, as we're going to wait for a full candle above the 20-day moving average on the daily chart, because we're swing trading. We're looking at the daily chart. If you see here in the graphic on the right, you can see the purple line. That's my 20-day moving average, and I'm pointing with the green arrow to a green candle that's above the moving average. Now you can see there were two candles before it. So maybe the first candle you were not. Now you're paying attention because that's a buy signal. Maybe you don't want to get in. Maybe you're not that confident yet. You wait for the second one. The second one's still above the 20-day. Now you got the third one with a nice green candle, and now you're like, whoa, okay, maybe I should get in now. So that's what I mean by you don't have to jump in right away. You can wait 2-3 days and still do well. And sometimes we'll use another indicator to confirm the trigger. So maybe just the candle above the 20 is not enough for us. We want to look at, does it happen on high volume? Is it overbought or oversold? We can look at any of the other indicators to give us kind of backup whether we should buy. All right, my sell signal is going to be the inverse of my buy signal, and that's we're going to wait for a full candle below the 20-day moving average on the daily chart. And of course, we're going to back that up with other indicators to confirm. As you can see here, let's say we decided to go in on the second or third candle below here. We decided to sell here. Even though it went up immediately, it didn't go through the line. And you can see it sold off. So this is kind of like a little bit of a fake out. You got to be careful for those that you don't panic. You got to really trade by the rules. And if you get in on a particular rule, you should also get out on a particular rule. So if you're using a rule to buy, you should use that same rule to sell. All right, how I do my buys may be different from the way you do your buys. I have particular reasons why I like to do it this way, but I buy my Bitcoin with cash at a Bitcoin ATM, and you can Google these where they're located. They're all over the place. They're usually in laundromats or convenience stores, and we're going to do it in $100 increments. And the reason for that is under $100, there's no KYC, no know your customer. If you do over that, then they're going to want to take your picture with you're holding your license up, so they can have a record of it. It's anti-money laundering that the government put in place. It used to be $1,000. Like you can buy up to $1,000 and not have to do the whole KYC thing. But they recently reduced it. I think they reduced it to $250 or $200. And then more recently, a few months ago, I noticed that they dropped it to $100. And that's fine, because I noticed if you want to do more than $100, you just do them in 2 separate transactions. But it won't let you in one transaction. It won't let you go $100 over $100 unless you do the KYC. Now, be prepared. You're going to pay a 10% premium typically. That's why we want to buy on the dips to minimize that. The 10%, you'll see it like if the price of Bitcoin is $7,000. Don't be surprised when you at the Bitcoin ATM it tells you that it's $10,000. That's the 10% premium. Now I say it's anonymous-ish because the machine does have a camera. Just be aware of that. Also, Bitcoin is public information. Everyone can see everyone's ledger. So, as long as someone can pin a name to a number, they can trace all your transactions. That's why I say it's anonymous-ish. So once we do our buys, we're going to send it to a multi-asset crypto wallet. That it's better if it has a mobile and a desktop version, but it's very handy to have it on your mobile phone because you can just scan it right on the Bitcoin ATM, and within a few minutes you feed the thing your cash, and boom, it shows up in your wallet. How do I sell? So with Bitcoin, I'm going to trade for Tether or maybe another altcoin using Shapeshift that's usually built into these wallets. It's called Atomic Swap. The way it does it, there's no third-party exchanges. You don't have to put your crypto at risk. You basically send it Bitcoin, tell it you want Ethereum, and a few minutes later, your Ethereum will show up. With altcoins, we're going to trade for Bitcoin, for Tether, or even other alts if they give us a nice setup. So in the case below there, I'm going from Litecoin, which is giving me a sell signal, and I'm trading it for Bitcoin Cash, which is giving me a buy signal. And here are some of the supplemental indicators we're going to use to support our buy and sell signals. We got support and resistance. We got relative strength indicator. We can base it on volume. There's another one called the MACD that's not listed here, or even public sentiment. If you feel that people are all excited about Bitcoin, it's in the news, we can use that. Okay, here's an example of a portfolio or asset allocation in a risk-on scenario. Risk-on meaning we feel that the market is going to go up. We're very bullish. We want to have all our soldiers marching. So in this scenario, I have 50% Bitcoin, 10% Tether or cash, and the rest divided up between Ethereum and some of the other altcoins. Now for you, this might be 75% Bitcoin and 20% cash. It could be 50% Bitcoin, 50% cash. It could be, maybe you want to be altcoin heavy, maybe 75% altcoins. Really up to you, but you should have, and plus these are going to change because we're going to be trading, so they're not going to stay the same. They're just going to keep moving as we see the market changing. Another scenario is risk off. And this is when we're very fearful. We think the market is going to drop, and we want to get a more defensive position. Here I show an allocation of 50% Tether now with 10% Bitcoin. So the 50% in Tether, whatever cash that is, if it's $1,000, it's going to stay $1,000. No matter what Bitcoin does, it's going to stay $1,000. The Bitcoin, the 10% Bitcoin is going to, of course, fluctuate. The altcoins are going to fluctuate. If we want to take a more defensive position, we could do 75% Tether and the rest divided up between Bitcoin and the altcoins. It really just depends on how you want to play it. But you should always have, no matter what configuration, you should always have at least 10% cash to jump on any dips or any opportunities that come up. Here's some pros and cons of the method the way I've laid it out. And of course you can pick and choose things. If you don't like the way I do my buys, you can buy it however you like to buy it. If you want to trade on an exchange, if that's what you like to do, then you can feel free to do that, no problem. The pros and cons in the method that I'm doing, the pro is it's a low stress, easy way to leverage up your Bitcoin without adding new money. Of course, we are adding new money through dollar cost averaging, but even if we didn't, we're looking to leverage up the Bitcoin we do have, the Bitcoin value. Also, we're not mining, staking, locking up the coins, putting it at risk. It's not on an exchange where it can be hacked or the exchange can close down. That's happened a ton of times. We're 100% in control. Some of the cons are it's 100% manual, so we can't make orders. We can't set up orders or sell triggers, or what they call stop losses. If you're into that kind of stuff, you're going to want to use an exchange, because you can't do that in these wallets. You can just manually trade from one to the other. There are also high fees involved in the way I'm doing it. That's why you want to keep your trading frequency down, and it forces you to be very efficient in your trading. So once you make a move, you want to make sure you want to be in that move and not overreact if it goes in the wrong way. All right, so now we're going to take a look at how this plays out in a real life scenario. So here's a chart that I spent a great deal of the past 3 years of my life looking at, and that's Bitcoin. We're at TradingView right now, tradingview.com. I'm using the daily chart. Set that right here, daily. And we're looking at BTC versus Tether, or USDT. And we do that because that's what I'm going to be trading. I'm trading Tether for Bitcoin, and that's what I need to be looking at. And I'm using the Bittrex exchange, but you can use any one of the exchanges that has this pairing. And first things first, I'm gonna clean this up a little bit. I'll remove some of my trend lines here. This is my short-term trend line, just to make this a little less busy for you. So remove those, and let's get rid of the RSI here at the bottom. You just hover over it and hit the X to remove it. And what else? Let's get rid of the 300-day moving average, because we're not going to be looking at that right now. And how about volume as well? Oh, I got rid of the moving average. That's okay. I was going to put it back anyway. So we're going to go to indicators, and we're going to built-in, and we're going to use the moving average. And the one we want is just the regular, normal, simple, or smooth moving average, not the exponential. So I hit it too many times. Let me remove some of them. Okay, so once we have the moving average up here in the top left, we're going to hit the little cog, and we're going to change that, the length. We're going to change it to 20. It'll be the 20-day moving average, the average of 20 days, what the closing price is. And let's make it a different color. Let's change it back to purple, dark purple. And I'll make the line a little thicker so it's easier. That's better. So it's easy to read. Okay, so now what we're going to do is we're going to back test this methodology. And you can see I already filled in some labels here of the different gains, and I put my buys and my sells so that you can see where they are. So we'll take it back to this particular date here as a hypothetical. So this particular date, let's say we got in Bitcoin, what date is this? February 13th, 2019, so a little over a year ago. We'll zoom in, and we can see that Bitcoin was just coming off of being underneath the 20-day for a couple of weeks. It had one green candle that went through the 20-day, and we actually got our buy signal right about here-ish. But let's say we waited because we weren't convinced. So we waited, and we got in probably the fifth candle. We decided that it's going to stay above the 20-day. And usually the idea is if it goes above and stays above the 20-day, it's likely to stay above the 20-day for quite some time until it goes through, and that'll be our sell signal. So we're in at this point. So we bought in, the price this time around would have been around $3,600 Bitcoin. Wow, very cheap. So we're in. We stay in for a couple of weeks. Or actually, it's not until We have a huge green candle in April, so that's nice. We're still in, even though it comes down and it touches the line. We don't sell. We don't sell until we get our signal below it, and sometimes we want to confirm even that. We want to get maybe 2 or 3 candles, maybe some good volume, or maybe indicating that it's all overbought in the RSI. So, but we're still in. We go in. We're in for a couple of months actually. So, it's not until June 6th is when we decide to get out, because we get a green candle that's below, we get another candle below, but it turns around. So in this case, this would be a wash, because you see it went flat and then it went above it. We're actually out and then we're in. When that happens, you're going to pay a fee to get out, a fee to get in. So it's going to be about this will cost you about $6 when you transfer it to Tether. It'll cost you another $6 to transfer it back to Bitcoin. So this here would be a false breakthrough, right? And the way I look at that is, a lot of traders, what they'll do is they'll buy options in the reverse direction of an asset. So if they have a long position in, let's say, Tesla, they'll buy puts, which is an option that it's going to go down, and they do that for insurance. So they put a little bit of money down. It costs them a little bit of money, but they're protected in case the thing goes in the opposite direction. And that's kind of how I look at it, because when it goes through the 20-day, it's saying it wants to sell off. It's likely it's going to sell off. The fact that it didn't, maybe it was based on fundamentals, news, whatever it is, it doesn't matter. I look at it as, I pay this insurance just in case the thing does sell off, I'm protected. Being out of the market when a sell-off happens is just as beneficial as being in a bull market, which you'll see in a minute. So we're back in right about here. We jump back in. We stay in even though it sells off here. As you can see, it's still above even though it sold off a lot. So you gotta kind of not panic. We didn't get our sell signal yet. So we bounce off. It actually went through the 20-day, but we didn't get a close, so we're still in. It turns around, it touches it again, and it's not until we get this green candle here below the 20-day on July 15th where we sell and we're out. And we missed this entire fall here. We're out of the market, so we saved ourselves from the loss in that case, and we're not back in until right about here. All right, so if we go back and we see, like, between this buy when we got in the market to when we sold our position is about 111% gain right there. And it was actually 115 days that we were in the market, which is pretty cool. So that's 111% there. And then we get another 28% up here when we get back in. Of course, this was a wash because we got in around the same price we got out, but that's okay. We paid a little bit of an insurance just in case, just to protect ourselves. And then Bitcoin goes through this very long sideways pattern where it's both crossing above and below the 20-day. And in these scenarios, in some cases you're making a little bit of Bitcoin, you're out of the market a little bit, saving yourself from a loss, but it's pretty much a wash when you think of the fees and everything. But it's not like we're doing this every day. It's like every couple of days, maybe a few weeks, we're actually looking at our wallet and we're making a decision to either buy or sell. And this goes on for a couple of months until we get a sell signal right here. And maybe we don't decide to sell in the first, second, or third candle. Maybe we sell in the fourth candle. And the fourth candle was the big one. And let's say we sold right around here. We don't get back in until we see the confirmation, which is this candle here. So we're actually not in until this candle. So it's a little bit of a difference. You know, not much gain, not much saved. So if I zoom out a little bit, you can see our gains are 111%, 28%, and then we're sideways for a while. What I want you to notice here is we avoided, using this method, we avoided between 12 and 14% losses in two different places, and that was here, this drop, and this drop as well. And when we come back a little more to the right here, you can see this drop here is very significant. We missed this 34% loss where we would have been sitting in Tether and our Bitcoin value just goes up while our cash value stays the same, because as the price of Bitcoin falls, our cash that we're holding now, or I call it cash, but it's in Tether, can buy more Bitcoin. And that Bitcoin is going to be worth a lot more later on. That's the goal. All right, so that's the method in a nutshell, back tested over the course of a year, a little over a year. So let's compare whether you just bought and hold Bitcoin to whether you decided to swing trade it and took a little more proactive approach to managing your crypto. So let's say on February 8th, 2019, when we got in the market, one Bitcoin was worth $3,700. If you had just bought and hold by May 24, 2020, that one Bitcoin would now be worth $8,866, which gave you a profit of $5,166 or 140% gain. Not too bad. But if you would have swing traded it based on the rules that I just showed you, when you bought, the Bitcoin would be the same, $3,700. But now, May 24th, you have 1.5 Bitcoin with a value of $13,300 with a $9,600 profit. It's almost $10,000, giving you a profit of 259%. Oh my God! Wow! Now, of course, this does not include the gains you made from trading altcoins. I actually have a indicator that I'm working on that I'm programming in TradingView. It's a script that goes by the 20-day rule here, and it takes into account the RSI as well. So it's like a screener. It's gonna when these pop up on the right in green, it means they're coins that I'd be interested in buying. So it would pre-screen it for me, and the ones that show up in red, those are the ones that if I'm holding that I'd want to sell. And in this case, the rules that I have is if it's below the 20-day moving average and the RSI is not already oversold, which means it may turn around. If it's in the oversold stage, it may turn around. But if it's under the 20-day moving average, it's going to pop up here telling me that maybe I should think about selling it. And the reverse for the buys, the buy screener, if one of these assets goes above the 20-day moving average or a full candle above the 20-day moving average and the RSI is not already overbought, it'll pop up here. So I haven't decided how I'm going to make this available to you guys. I'm still working on it. I'm still learning. So stay tuned for that. So yeah, this comparison doesn't include the gains made from trading altcoins, obviously. And also, disclaimer, past performance does not blah, blah, blah. You know how it goes. So that's it. The conclusion here is the volatility of Bitcoin can make it very profitable for swing trading, and something that you might want to take a look at. So let me know what you thought. Let me know if maybe you're using different indicators. Maybe you're using a different rule for your buy and sell triggers. I'm really interested in seeing how other people are doing it. This seems to be working well for me. So that's it. That's all for now. Don't forget to give us a like, subscribe, all that nonsense, and we'll see you in the next video.